Good morning, good afternoon, everyone. It's Ankit. Whenever or wherever you're watching this video, thank you for taking the time out of your busy schedule to watch today's video. I hope everyone's having the best day or the best week of their life. If you found value and are excited about today's video, make sure to hit the subscribe button for more videos like this. Today's video is going to be about the best dividend ETFs and their top positions. Are you an ETF person or a stock person? Either way, these ETFs are right for you and to incorporate in your portfolio. Leave a comment below with what your favorite ETF is. Let's try to hit 3,000 subscribers in 3 months. With all that out of the way, let's get into today's video and talk about these ETFs. The first ETF we're going to talk about is iShares Select Dividend ETF, trading under ticker DVY. The market cap for it is $2.45 billion. When you look at the 1-year chart, it's up 1.89%. The 5-year chart up 27. Let's look at the max and zoom all the way out, 127%. Let's look at their current holdings. So currently, as of July 22nd, it has 105 holdings. And if you go to their main website, iShares.com, and then you search for this dividend, DVY, you can see all their current holdings and the amount that each holding weighs, and the market value, and the asset class, and the sector it's in, and the name of the stock. And as you can see, some of these stocks you probably might know. And if you don't, you can always research them. Just Google it. You should know AT&T, Pfizer, and a bunch of these other ones like Coca-Cola, and a bunch of energy stocks, as you can see. HP, which Warren Buffett just bought a whole bunch of, McDonald's, H&R Block, Caterpillar, Emerson Electric. So yeah, check all these holdings out, and when you look at their fees, it's 0.38%, which is not that much. And if you scroll down, you can see the exposure breakdown of where they're focused on right now is utilities, finance, and consumer staples. And you can download all these different sheets to do more research on this ETF if you want to. Next, we have Swab US Dividend Equity ETF, currently trading under ticker SCHD, currently trading at 72.18. It did go up a little bit after hours to 72.28. The PE ratio is non-existent because this is an ETF, obviously. And the yield for it is 3.44. The expense ratio is 0.06%. Let's look at the year to date. It is down, but as the whole market is down. And if you look at their top holdings, it's Merck, Home Depot, Texas Instruments, Broadcom, and all these other ones, and BlackRock Inc., which a lot of people should know about. Let's go to their main website and see what their holdings are. So when you go into their main website, you're going to get all the information about the ETF. The weighted average market capitalization, the price to earnings, the price to cash flow, return on equity. If you scroll down, total returns monthly. And you can even do quarterly if you want to. Over the 3 years, you can see the market price. Over the 5 years, you can see the market price, the 10 years. And then when you click up here, the performance, that's where you're going to go to see all this data. You can click on distributions to see all the different distributions. If you scroll up, you can see the sectors that majority it's invested in finance, information technology, and consumer staples. As you can see, that's a trend right now. The top holdings as of July 22nd. And the last ETF we're going to talk about is VIG, Vanguard Dividend Appreciation Index Fund, currently trading at 148.50. It yields 1.93%. The expense ratio is also 0.06%. Year to date, it is down, as you can see. The 1-year chart is also probably going to be down, and then the 5-year, it's not down too much. When you zoomed out, you can see the max charge is going up. Let's look at their holdings. So you can see the equity holdings, the bonding ratio. In the top 10 holdings, as you can see, Microsoft is number 1, JP Morgan Chase, Johnson & Johnson, Walmart, United Health Group, Visa, Home Depot, Procter & Gamble, Comcast, Oracle, all decent and amazing companies. So investing in this ETF will be a good idea when the market, calms down and crashes. This might be a good opportunity for you. If you don't want to manage your whole entire portfolio, this is a good chance for you. Just put this ETF in your portfolio. And those are 3 ETFs that you should consider buying when the market or when those ETFs drop. Just make sure to buy those dips. This is not financial advice. This is just a suggestion. And this is recommended for those of you that don't have time to manage your portfolio.